Hey guys, welcome back to the channel. Today I thought that a topic that might be useful to talk about is how we might position our portfolio for the coming presidency. So, as you know, a lot of new policy changes have happened immediately um, as Trump took office. And this has real ramifications for the economy and for stocks and investments in general. So I just thought that it might be good to narrow in on a set of different areas that we can look at that might help us take advantage of the new climate for business. Overall, Trump's policies are going to be very pro-business, and there are a few places in particular that his policies will really help. And so we'll go over those and we'll look at a few simple ways to invest in each of these. And what I'll say off the bat is, it's obviously a very chaotic time politically. And, with that political polarization, it becomes hard to think about your portfolio. But it is really important, just to constantly take stock of sort of where the economy is at, what regulation changes might mean for your portfolio. And so this is just one of those examples. And I will argue that, whatever side of the political divide you're on, giving yourself more of a financial, taking care of yourself financially will just give you more opportunity to take action where you want to. I think it's important that you take care of your financial well-being. This will help stabilize you during these sort of volatile times. It'll also just give you resources to do the things that you want to do, whether that's politically or personally. And that's important during these times. So the first area I'm going to talk about is cryptocurrency and Bitcoin. Obviously, I did a video on this, and I don't believe fundamentally in investing directly in cryptocurrency. However, it's pretty clear that the administration really wants to promote cryptocurrency, especially Bitcoin. That said, I wouldn't directly still invest in these currencies only because, as I've said before, they don't have any intrinsic value. So you may see a huge rise in these cryptocurrencies for a time as the policies promote them. But because they have no intrinsic value, basically any sentiment against them can just pull the rug out from under it. So I would say, as I did in my cryptocurrency video, I would invest in companies that have actual value, that are providing either the resources or raw infrastructure to cryptocurrency or blockchain. And so some of these names that I've talked about are, NVIDIA, big tech companies like Google, Amazon, even some of the sort of companies that are using blockchain, like Visa or MasterCard or any of these sort of financial companies. I think that those are places where you can invest and still legitimize your investment in an asset. If you're looking for just an ETF, I would just suggest buying VGT, which is the Vanguard Information Technology ETF, and that has companies like NVIDIA inside of it. NVIDIA is providing the chips for a lot of the processing power that's required for cryptocurrency. And so by buying this, you're just investing in the raw infrastructure around cryptocurrency. Okay, next up, I would say artificial intelligence is obviously still a huge bet to place for the coming years. We're still in the earliest stages of the AI revolution. And again, you're going to find similar companies supporting the AI boom as you are the cryptocurrency boom. It's become a big point to fund AI growth within the United States. So regardless of where you see AI going, or if you think that we're not going to get as high of returns, there will be money being poured into the industry, both from a government and from a private standpoint. So even if that's just the level of support that you're getting, you still can bet that AI will continue to grow. And again, you can invest in NVIDIA. You can also invest in VGT. You'll also, if you invest in some of the like mega cap funds, Vanguard has a few mega cap funds. Those are going to include a lot of these information technology companies as well. So, I would just say like, invest in companies that are providing infrastructure, that are developing AI, that are employing AI. Palantir's another company that's done really well. It's hard to say whether they'll continue to do well. But it's a company that's definitely benefited from the AI boom. You can also always just go with companies like IBM, Google, a lot of the big tech companies who are going to be benefiting from sort of the expansion of AI. Okay, thirdly, you know, during a Republican administration and during Trump's administration, we're going to be very pro defense and aerospace. So, whereas like a Democratic White House would focus on a lot of social programs, you can definitely see a Republican focus on sort of big defense contracts. So, you'll just be able to see that, like, because Trump is pro business and because he's very pro defense, um, you'll probably see a bunch of new contracts come through and just see just a loosening of sort of the spending that comes within defense and aerospace. And some of the names that come to mind are Lockheed Martin, Northrop Grumman, Raytheon, and Boeing. But Vanguard also has an industrials ETF that covers a lot of aerospace and defense, and that's VIS. So, if you're looking for broad exposure to some of these companies, you can go with the Vanguard sector ETF and industrials. Okay, fourth up, a big focus on Trump's agenda is increasing tariffs for foreign imports, largely Canada and Mexico and China. So what happens when you increase tariffs from those countries? Well, the price of those goods is just going to go up. And suddenly, you know, domestic products may seem relatively cheap compared to it. Overall, it's not great for any consumer because all the prices will go up. It's not like you can just decrease the cost of like American goods. It just makes foreign goods more expensive. That said, if we're looking at companies within the US that have a strong sort of domestic supply chain and sell to the US, we can look at companies like Caterpillar, Deere and Co., U.S. Steel, Alcoa. These are companies that have a lot of their operations in the U.S. They're selling domestically. They'll benefit from tariffs placed on imported goods. Again, you can also focus on some of these defense contractors within the industrial sector. So you can purchase the industrials ETF from Vanguard. You can also purchase the materials ETF, that's VAW from Vanguard. And that covers a lot of domestic manufacturers. So, there are a bunch of sort of companies that will operate within the US that will benefit from having heavy tariffs on international goods. Okay, next up, I would say, just during any Republican presidency, the financial sector will be deregulated. So financials is a place where you might look at increasing exposure to. We know that Trump is very pro deregulation. We know he's very anti big government. And a lot of like what has happened over the past 15 years is that there's become more regulation around financials. But with like a lessening of financial regulation, you'll certainly see these big banks start to increase their profits and revenue. Of course, this can be very dangerous for the economy depending on how much risk they take on. But in the short term, you can probably expect there to be record profits with these companies. So, you can look at a lot of different big banks like JP Morgan Chase, Goldman Sachs, Bank of America, Charles Schwab. But, Vanguard also has a sector ETF in financials. Their Vanguard's financial ETF is VFH. And this will give you broad exposure to a lot of financial institutions. This is just a time where, businesses will be able to operate pretty freely. And because financials is a lot about regulation, with deregulation, they're just going to be able to expand very quickly and introduce a lot of new products. And that will definitely help their bottom line. Next up, we should talk about energy. Obviously, not great always for the environment, but as comes with deregulation, Trump is very pro fossil fuels. regardless of whether philosophically or ethically or morally you support fossil fuels, they will become important. Again, we're going to reduce the amount of incentives to renewable energy, and that's just going to make fossil fuels feel cheaper compared to renewable energy. So, you can invest in your typical oil and gas producers like ExxonMobil, Chevron, Halliburton. And then, of course, there's also a Vanguard Energy ETF, VDE, which covers, a broad range of energy producers. So, yeah, maybe not great for the environment, but, it definitely will grow as a sector simply because of deregulation. And as a business, as the economy sort of becomes deregulated generally, people are going to probably just purchase, more energy sources. Next up, we can talk about real estate and construction. So obviously, again, this keeps with the theme of deregulation. But favorable zoning laws and sort of domestic construction incentives will definitely help create a slight boom in the real estate market. So, you can look at various companies that might benefit from this, like home builders or supply chain like Home Depot or Lowe's. You can look at real estate groups. You can look at REITs. I've talked about REITs before, but they're real estate investment trusts. And you can look at Vanguard actually has a real estate ETF. It's VNQ. That's their domestic REIT fund. And so that will give you exposure to real estate as sort of, there's deregulation in the market and real estate sort of has more of an opportunity to boom. Another area of opportunity could be healthcare and pharmaceuticals. Again, with limited government oversight, new products can be pushed into the market much quicker. There will be faster FDA approvals. Eased regulation will just offer these pharmaceutical companies quicker turnaround from R&D to having a product. So you can, invest in companies like Pfizer, Eli Lilly, Moderna. These are all companies that you've probably heard of. But, with deregulation to sort of the healthcare industry, we'll definitely see a boom in sort of the profits that they're making. I mean, we already saw that Trump withdrew sort of the cap on insulin. It's not great for individual consumers and people who are suffering from chronic illness, but it certainly makes for a better environment for these profit-seeking companies. So you can invest again in Vanguard's healthcare fund. That's an ETF, VHT, which covers again a broad range of healthcare and biotech companies. That will give you pretty broad exposure to the market. So you don't have to stock select as with all of these different sectors. So, the last sort of place that I'll talk about is sort of given that there's probably going to be a lot of political instability and we'll never know sort of what's going to happen geopolitically, there may be some opportunity to invest in just safe haven investments. This is stuff like gold, treasury bonds, dividend stocks. Again, these are kind of rotational stocks I've talked about in a previous video. But you can invest in places that seem like to most people safe bets. Because when there's a lot of volatility, whether it's in the stock market or geopolitically, people will tend to push their money into places that they deem the most safe. So you can invest in sort of a gold shares ETF. There's one that's the ticker symbol GLD, which is very popular. Treasury bonds will become very popular. VGLT is Vanguard's longer term government bond ETF. You might want to look at just dividend appreciation stocks. Vanguard has one fund, VIG. And so generally speaking, there might be a sort of argument for just going into safer assets because you just never know when some sort of political move is going to really shock the market. So overall, I would just argue to continue to stay the course. These are just slight adjustments that you might want to make when sort of looking at your portfolio. You may want to over index slightly in some of these areas just to take advantage of sort of the the boom to each of these sectors. And that's purely driven off of like deregulation, government investment in these areas. But you should also make sure that your portfolio is still highly diversified, because you just never know when one sector or region is going to do better than the next. And again, with a sort of volatile White House, you never know when a really major decision is going to affect the markets. So, all in, stay the course. Make sure you have a diversified portfolio that includes, all sorts of equities, including international equities, emerging markets, domestic US equities. Broadly look across, large cap, small cap, and mid cap. Look at real estate, look at inflation protected securities, inflation related assets. All of these things will help keep your portfolio, you know, defensive against any big market moves. And then when there are big market moves, it might be a good chance to rebalance your portfolio. So I hope this video was helpful for you. It's one place where we can sort of like just look to sort of stabilize ourselves when the rest of the world feels very unstable.